Okay, so um, video on its way. I've just typed in there. So the market has shot up and it's correcting. So you've got the broader trend line intact. So I'm not saying that the market's about to collapse. What I'm saying is that the market usually likes to return to an equilibrium, and um, in that, what we have currently is a 50% mean reversion that tallies up somewhat with this near term trend line. Okay, so that's a reasonable target for the market to move towards. All right, where buying interest might come in again. Sorry about my voice, I've got a bit of a cold, so that's why I've been avoiding videos because yeah, I don't have much of a voice. Anyway, so that is the scenario that I'm looking at for a move in. So I hope that explains the chart. And then if we move down to say the 15-minute chart, and let's go to the 1 hour, then we can see that the market has indeed um, broken that prior support area where the market moved up to the high. So it's come into that, and now it's broken through there. Yeah. So the bias is confirmed to the downside. Now we've got a potential support area over here. If we move down to the 15-minute chart, you can see that there was activity in this area. Just move that up a bit. In that area there, you have buyers and sellers. So that's an area of um, liquidity where we might find um, buying interest and a push up potentially into the prior area of transactions, so which is over here, which is this up candle. So we might see a correction, maybe up into this area. So that's why I've put a sell limit in that area, all right, with a stop above that area. Now you can be conservative and put the stop right up above, say, the prior support area. Um, okay, so, and in that respect, you might want to place the order at the highs of that transaction area, give you a better risk to reward, or however you want to do that. But that's just it's just an idea. It's a trade idea. It's not advice. I'm just giving you an example of how this could play out. And then the market from that point on could well turn lower again and run towards the downside area target, being the 50% mean reversion, um, and this old resistance, so it could act as support. And it could come in, further in, keep coming down. um, and you've got the broader trend line if you wanted to leave a runner on, to target all the way into coming down into the 61.8, 78.6, that would eventually align up with the broader trend line support. If that makes sense. So maybe not as far down as there, depending on how fast the market moves or to the downside. But if it were to trickle down, then you'd be looking more over here. But if it was a fast market, then you'd be coming down further in. Okay, I hope that helps.